Hello, everybody. Welcome to my video solution walkthrough for exercise 16.8. This is Intermediate Accounting 17th edition by Don Kiso, Jerry Weingart, and Terry Warfield. The question used in the presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright by 2019 to 2022 by myself, Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or Wiley. Also, this is not meant to be construed as any type of accounting or legal advice. I'm just walking through textbook questions to help my students. So there you go. Okay, to help everybody else. Okay. So issuance with bonds with detachable warrants, this is kind of a fun question. So on September 1st, Sands Company sold at 104 plus accrued interest, 4,000 of its 9% 10-year, $1,000 face value non-convertible bonds with detachable stock warrants. So we know that we're going to be assigning something over to those warrants. Each bond carried 2 detachable warrants. Each warrant was for 1 share of common stock at a specified option price of $15 per share. Shortly after issuance, the warrants were quoted on the market for $3 each. No fair value can be determined for the Sands Company bonds. Interest is payable on December 1st and June 1st. So we're going to prepare the entry to record the issuance of the bonds. So the thing over here is we know what the value of the warrants are. So we're going to really go with that as our guiding light. So the other part here, which is really not clear, is that these bonds were dated. So exercise 16.8, assume bonds were dated on 6/1/20. Okay. So let's take care of the cash first. So my cash proceeds on 9/1/20. The amount of cash that I'm going to be receiving is going to be, and actually I like to do this cash from bonds, and I'm going to have cash for the accrued interest. Right? Normally you would just combine them, but I think for educational purposes only, I like to split those up just so you can kind of better see the calculation. So right over here, we're going to have 4,000. So 4,000 of its $1,000 face value bonds at 104. So I'm going to multiply that by 1.04. So this is 4,000 bonds, 4,000 $1,000 bonds at 104%. So that's where this 4,160,000 is coming from. For the accrued interest on them, and by the way, the bonds payable is always going to be shown at the face value. This is going to be 4,000 times 1,000, or right over here at 4 million. For the accrued interest, this is going to be 4,000 times 1,000 bonds. The bonds are 9%, but whenever we see an interest rate, it is always an annual rate. Okay, so this is going to be times 9% times 1/2 semi-annual. And then we're going to be multiplying that value here by 3/6, or June, July, August. And I'm dividing it by 6 because it's going to be a semi-annual. So this is how, again, semi-annual interest payment, and then it's for half of those months. So this is going to be 4,000 times 1,000 times 9% times half times another half, or we're going to get a total of 90,000. What I'm also going to do over here too is I'm going to credit interest payable, because I'm going to have to pay that interest because they're prepaying it with the bond. So I'm going to have to go through and credit that interest payable, which will be relieved when we make our first payment on December 1st. So we don't know what the value of the bonds are, but we are told that shortly after the issuance, the warrants were quoted on the market for $3 each. So what I know over here, we have 4,000 bonds. We're going to have 2 detachable warrants Okay, so this is going to give us a total of 8,000 warrants. We have 8,000 warrants over here. This is going to be at $3 each. So my total, the total value of the warrants is going to be $24,000. So this is going to be additional paid-in capital stock warrants. Okay, so what I'm now going to go through and do is I'm going to play, let's see what the balancing game is, or let's determine if this stock, if this bond was issued at a premium or at a discount. So over here, I've got total debits of 4,250,000. I have total credits of 4,114,000. This means I'm going to need a credit to balance this particular entry. The amount of the credit that I'm going to be needing is 136,000. What this is telling me is that the bond issued for more than the face value. So this is going to be a premium on bonds payable. Remember that when you're memorizing bonds, right? If you have a question like this and you need to balance it with a credit, it's going to be a premium. If you need a debit, it's going to be at a discount. So this is going to be the journal entry that we're going to be going through and using to record the bond issuance over here. So I want to thank you for joining me here today on this, yet again, another video excursion. Please don't forget to like and subscribe. If you'd like to see other solutions, please feel free to ask for them in the comments. Have a great rest of your day, and I look forward to seeing you on the next video. Have a great one.